The S&P 500 and NASDAQ composite experienced a pullback from their recent all-time highs. While many are raising concerns about stretched valuations, my next guest argues that there's much more to like in the market than there is to fear. Let's go to Adam Johnson, founder and author of Bullseye Brief. Thanks for joining us today.
You bet, Morella. Great to be with you.
So we're into earnings season again. Are you separating out tech stocks from other stocks, and what are you expecting for earnings?
Well, I think the theme that's going to start to evolve or emerge over the next couple of weeks, Morella, is that this is going to end up being the fourth consecutive quarter of double-digit growth coupled with record or near record margins, despite tariffs, despite everything, shutdowns, on and on. Corporate America is very strong right now. And I know that there have been some signals that the labor market is starting to show some weakness, but not in corporate America. Look at what happened this morning with Delta Airlines. Delta knocked the cover off the ball. They beat the estimates, they raised guidance, and that is because the premium side of the business, interesting, right? The premium side, not the bargain basement, but the premium side of the business is growing much faster than expected. So Delta, obviously up today, and you can see how it's done over the past year. 2 days ago, look what happened at Dell. They raised guidance not just for this year or for the next 4 quarters, but for 4 years. I don't think I've ever seen a company raise guidance for 4 years, and that's because of the AI build out. And in fact, if you talk about AI, it really amounts to a giant stimulus program. $370 billion is being invested by the big companies down here, Amazon, Google, Apple, et cetera. $370 billion this year, going to $420 billion next year. Well, that's like a giant stimulus program. So while the world is certainly not perfect, there are shutdowns, there are wars, there is some weakening employment statistics. The fact is there is just so much more to like than to fear. So if you ask me whether I would wait to tech companies versus banks versus industrials, I think you can honestly own just about the entire complex at this point ahead of the earnings, because we're also going to the seasonally strong time of year. So I'm fully invested and very comfortable being fully invested.
Okay. Have tariffs worked through? Have concerns passed, or do you think investors are just ignoring all of it?
Yeah, I think they're ignoring it. And I think that's because of lessons learned. There have been so many different back and forth comments about the tariffs. And yet, you know what? The level where they seem to be kind of sitting, 10 to 12%, that's something we can live with. And they get kind of shared around by all the different entities. In other words, consumers may pay a third of that, importers pay a third of that, and producers overseas pay a third of that. I'm glad to see that the rhetoric between the U.S. and Canada was toned down, as it should be. Ditto Mexico. Europe, Japan, South Korea, they're all 10 to 15%. Again, we can live with that. So yeah, I think we've largely looked past tariffs, just as we're actually largely looking past the government shutdown. Markets always look forward, and I think markets are generally comfortable with where things are going.
You mentioned you're fully invested at this time. We feel pretty confident across the board, but what's your must-have stock right now?
Oh, what's my single must-have stock? Actually, I'll give you several. And they're, not surprisingly, all in the artificial intelligence area. You've got to own NVIDIA. That's just a core holding. I mean, you could say that about all the big guys, Google, Amazon, et cetera. But a company like Celestica, CLS, half Canadian, half American, by the way. Celestica is just a wonderful company that assembles AI platforms for clients. This has been a triple for us over the past call it year and a half, and there's more where that came from. I mean, look at that chart. That is just a thing of great beauty. And then there's some of the smaller companies like a CoreWeave that has effectively turned artificial intelligence into a platform you can rent, right? We rent the runway, we rent houses, we rent cars. We rent just about everything, equipment, and now you can rent artificial intelligence through CoreWeave, which has a partnership with Applied Digital, APLD. So Applied Digital builds and operates the data centers. CoreWeave then creates the software platforms that fill those data centers. So it's a wonderful web, a virtuous web, as I like to say. Clean Spark is another one, CLSK. This stock is super cheap. There it is. You can see it's run. It's doubled in the past month. That's okay. There's a lot more where that came from. It's still only trading at a mid-teens multiple. If you don't know the company, it's the lowest cost Bitcoin miner in the US. And they're converting some of their capacity to artificial intelligence. So that means it re-rates to a higher multiple. So yeah, there are a lot of names, and you asked me for one, and I just gave you a few because I don't think you can put all your eggs in one basket. And I do think that the AI theme right now is the most powerful theme in the market. I think it's one of the most powerful themes I've seen in my career, and you should absolutely have a handful of names like the ones that I just shared with you.
Okay. I also wanted to ask you whether or not you noticed a bump from that first rate cut in the U.S.
Say again, if I what?
If
The
you
first
noticed
rate
a bump, like some stimulation from that first rate cut in the U.S.
Yeah, I mean, that's in part why markets have been up, because it wasn't just that first one, but we're going to get certainly another, and I expect a couple more after that. In fact, you could argue that the longer this shutdown goes on, the more likely the Fed is to sort of, prime the pump with rate cuts. I think the Fed has been late to the ballgame. I understand why they have been late. They didn't want to see inflation run. Jerome Powell retires, the chairman of the Federal Reserve, retires next May, and he's protecting his legacy. He doesn't want to be the Fed chair who started to lower rates only to, oh my gosh, a couple months before he's done, have to raise them again because inflation resurfaced. So he waited very long. I think given tariffs and the uncertainty around them, and now we've gotten through that and realized it's not so bad, and it's not stoking inflation. So we said, okay, fine. And he cut by 25, and there's more to come from. But, think about it. Interest rates were probably too low for too long, close to zero, right? And then inflation went from about 1.5% to suddenly, depending on which measure you want to use, 9% or 11% in the case of the PPI. Well, now inflation's back to 2, and yet rates have only come down by 1.25 percentage points. So there is room for rates to come down. I would argue probably another percentage point, maybe more than that. And that'll be a huge tailwind for everybody, so many different industries. I mean, we saw that new home sales spiked 20% month over month just because mortgage rates have come down 50 basis points. 50 basis points, that's nothing. So, you take another 100 to 150 basis points, that'll stimulate housing, home sales, and a whole host of things.
All right. I do have to leave it there. Adam Johnson, though, thank you for joining us. Adam's founder and author of Bullseye Brief.